In 1987, he correctly predicted the Black Monday and made a profit of $100 million on a single day. He founded the Tudor Investment Corporation, which became one of the most successful hedge funds in the world. As of 2023, he has a net worth of $7.5 billion, which ranks him at number 299 on the Forbes Billionaires list, and at number 104 on the Forbes 400 Richest People in America list. Starting from very humble beginnings, Paul Tudor Jones accomplished all of this using his well-defined set of rules, which he used in his trading strategies. In this video, we will uncover those rules, the secrets behind his success. So if you're ready to take your trading game to the next level, then buckle up and join us on this journey to discover how Paul Tudor Jones made $7.5 billion in trading. Part 1. From college to trading. Paul Tudor Jones got interested in trading after reading an article on Richard Dennis. He thought that Dennis had the best job in the world, and he wanted to do the same. After he finished his college, he asked his uncle, who was also a trader, to help him get started in trading. His uncle sent him to Eli Tullis, a famous cotton trader, who lived in New Orleans. Eli got him started, and taught him a lot on how to trade and win. He says, "The one thing I learned from Eli is that ultimately the market is going to go where it is going to go. He also taught me that trading is very competitive, and you have to be able to handle getting your butt kicked. No matter how you cut it, there are enormous emotional ups and downs involved." Eli's attitude was, "The hell with it. I'm going to take them head on." He also instilled in him the idea that to be a good trader, you have to be a contrarian. Part 2. One trade that changed everything. In 1979, one bad cotton trade blew his accounts, and he lost around 70% of his complete capital in that single trade. He says, "That was when I realized the importance of being disciplined and managing money properly. It was a transformative experience for me as I reached the brink, doubted my skills as a trader, but eventually decided not to give up. I was determined to recover and fight back. Consequently, I decided to adopt a very disciplined and business-like approach about my trading. Now, my focus is on maintaining my happiness and calmness throughout the day. If I have positions going against me, I get right out. If they are going for me, I keep them."
Part 3. Trading strategies. Rule 1. Use 200-day MA.
Jones is a big believer of technical analysis and price action. He says, "I always believe that prices move first, and the fundamentals come second." He believes that charts can tell a story about a market, and that by understanding the patterns in those charts, he can predict where the market is headed. He uses a variety of technical indicators, such as moving averages and momentum indicators, to identify trends and potential turning points in the market. In an interview with Tony Robbins, he told, "My metric for everything I look at is the 200-day moving average of closing prices. One principle for sure would get out of anything that falls below the 200-day moving average. This means that if he is long in a trade, he will exit as soon as the price crosses below 200-day moving average. He also uses 200-day moving average, in conjunction with other indicators, to plan his entries. Rule 2. Look for tremendously skewed risk-reward opportunities." In the same interview, he also says that I teach at least to aim for 5:1 risk-to-reward ratio. He says, 5 to 1 means I'm risking $1 to make 5. What 5 to 1 does is allow you to have a hit ratio of 20%. I can actually be a complete imbecile. I can be wrong 80% of the time, and I'm still not going to lose. Also says, in terms of my investment philosophy, I tend to avoid taking significant risks, and instead focus on identifying opportunities that offer tremendously skewed reward-risk ratios. Rule 3. Use macro analysis. Jones would also look at the broader macroeconomic environment to help him make trading decisions. He would study factors such as interest rates, inflation, and geopolitical events to help him gauge market sentiment. He says, "I love macro. If trading is like chess, then macro is like three-dimensional chess. It is just hard to find a great macro trader." Before we move on to the last rule, I would request you to please subscribe to the channel. And like this video, this gives me a lot of encouragement to keep producing better videos. Thanks.
Rule 4.
Play great defense, not great offense. When the interviewer asks him, "You've achieved a lot of success over the years. Don't you feel more confident in your skills and abilities as a trader now, compared to your earlier days?"
He says, "I feel more fearful now than at any time since I started trading.
as I realize how fleeting success can be in this field. I am aware that in order to succeed, I have to be anxious. I have found that my biggest hits have always come after great wins that made me think that I knew something. After significant winning wins, I am especially cautious about becoming overconfident. This is how much importance he gives to risk management. Like I previously said in my video, trading isn't all about profits, but also about protecting what you have. Because if you don't have a seat at the table, you can't trade. The two biggest components of risk management are 1. Always use a stop loss. 2. Never risk more than 5% of account equity on a single trade. Jones calls it the 5% rule. He also remarks, at the end of the day, the most important thing is how good are you at risk control. 90% of any great trader is going to be the risk control. The most important rule of trading is to play great defense, not great offense. He stresses a great deal on always being humble and keep learning from your mistakes. Do you know that behind all our trading mistakes, like not sticking to a strategy, not cutting our losses short, etc., there's only one and one reason. To find out what reason is, watch this video.
Please like the video and subscribe to the channel if you haven't already. Thanks for watching, and I'll see you in the next one.